If you have been feeling that the markets are more trending nowadays, you are not wrong. Because if you're looking at the Nifty 50 chart of the last 1 month, you can see that the candles being formed here are much larger than the candles which were formed in the previous year. Okay, so what does that mean? It means that intraday volatility and intraday movements have increased much more in the last few months. And me, being a non-directional trader with MarketFeed's automated trading systems, I know that this is not an ideal time frame. But I still believe that markets will consolidate 80% of the time. That's what the statistics say. And the markets will soon start cooling down and start moving sideways. But in that time frame, if you've ever thought, hey, how do pro traders catch these wild moves and reversals in the market, then this strategy video might be the right place for you. Parabolic SAR. So in a market where trends are strong, like the market we are in right now, if you're looking at Nifty's candles, the last few months of Nifty have been highly volatile. If you're looking at the daily candles, they're much bigger than any of the previous periods. Okay, so in times like this, parabolic SAR or trend following strategies are worth a look, because me being primarily a non-directional trader, I enjoy that 80% of the time that market consolidates. That's what the statistics say. But what about that remaining 20%? Should I or can I try implementing some new strategy in my personal arsenal? That's how I started thinking about this, and that's how I arrived into this parabolic SAR indicator. And that's what I want to introduce to you today. So first, let's go through the agenda of the video. I want to talk about what is parabolic SAR, how does it work, how to trade it in intraday, and we'll discuss swing trading setups also, risk management, trading setups, and key things to note. It is a very useful and easy technical indicator to understand and add to your trading arsenal, but you have to understand it really well before proceeding to trade it in the live market. So that's what I want to talk about today. So if that's the case, what are you waiting for? This is Ajay Ajith. Welcome to Market Feed. So first, we'll quickly look into what is parabolic SAR. It's a trend following price-based technical indicator. Okay, you need to understand that really well. It's purely based on price movements and it's a trend following indicator. Okay, and here it is primarily used to identify trends and majorly, in fact, we'll get into the name of this indicator. It majorly means or is used for identifying potential reversals. I know that's what a lot of people want to learn about. How to buy low and sell high. That's what you want to know. And for that, you have to catch reversals at an early stage. We'll get into that. Because when you're getting into the name of the indicator itself, SAR means stop and reverse. Okay, so I'll tell you what stop and reverse means. Suppose you have a long trade which you took at 100 rupees. You bought a stock and you have a stop loss at 95 rupees. And the price moved down, it hit your stop loss. And what if you took a double down order there? That means instead of just taking your stop loss there, you took a short trade there. That is a concept of stop and reverse. Here, we are not going to fully follow that concept, but we are going to use the parabolic SAR trading indicator, which is with the same mindset or philosophy. Okay, you took a stop loss. Now you have to take a fresh entry. That's what this indicator is all about. Now, it was invented by John Wells Wilder. It's the same person who invented the RSI indicator. Okay, so he's a very well-respected technical analyst, and multiple indicators of his are very famous, including parabolic SAR, RSI, and even ADX. So then let's get into how does parabolic SAR work. It works with the concept of time is the enemy. So if you're going to catch reversals, you need to catch it early. And that's the entire concept of this indicator. How do you catch the reversals, or how do you catch new price trends as early as possible? Okay, so you do not have any time to waste. That's the concept. Now, it is plotted as dots in the price chart. Okay, so if you have the price candles moving, it's like dots which follow the price in the price chart. So dots below the price indicate bullishness and dots above the price indicate bearishness. So you can think of it very similar to the exponential moving average. Do not worry, we'll get into the chart so that you understand this very clearly. And the benefit of this, or why it is somewhat beginner friendly or somewhat easy to understand, I would say, is it has only one major variable to adjust, which is the acceleration factor. So if you're looking into the formula of parabolic SAR, you can see that it always tries to predict the next point. Okay, so if the time is now 3:40, it tries to calculate what will be the next point or the next point of the indicator. So in some ways, you can call it as a leading indicator because the next time frame's trend is already defined in the chart. But in general, it is being called as a lagging indicator. But I want to get back and discuss the acceleration factor because that's the only thing that you have control upon. Okay, so every parabolic SAR calculation happens with what was the SAR value in the previous period. Then there is something called as alpha, which here is the acceleration factor, and EP, which is an extreme point. Okay, extreme point or extreme price is nothing but the high, swing high or swing low in that nearby trend. Okay, so if the price moved to a low of 95 and then started reversing, that 95 will be called as an extreme point or extreme price. And yes, then again it calculates the previous SAR value. So you can see that the formula is really easy to understand, and this acceleration factor, you have to understand why it is important so that you can start thinking into its settings later. So if that is done, let's get into how to use it in the live chart and how to use it for intraday trading. Okay, so quickly we'll move into the trading view chart here. Here I have the Nifty chart open. I'll make it so that it is much more clearer to see. And you can see that, or you can come to the indicators tab here. You can type in parabolic SAR and you'll see the SAR values or the SAR dots being displayed in the chart. Okay, for it to be more easy to understand, you can double click on it, change the color to, let's say, a blue, and increase the thickness so that it's much more visible here in the chart. So now what does this look to be? Okay, we'll quickly look into or quickly try to understand what this look to be. It's somewhat similar to your super trend indicator. Okay, so it indicates a trend which can be used as a common stop loss point. It can be used as a common entry point also. So we'll get into that. But before getting into that, first thing you have to come do is adjust the settings, because the settings of acceleration factor, which is here called as increment, is not ideal for stocks. Okay, so you have to come here. You have to reduce this to 0.01. Okay, keep the max value the same, keep the start as 0.01 and the increment also as 0.01. How does this help you? I'll tell you. So this parabolic SAR is a highly reactive indicator to market trends. So you want to make it less reactive for something like stocks and commodities. Okay, so that's what we are going to do here. We have decreased the acceleration factor, which is here called as increment, so that it is more stable, because stocks by itself are more volatile. So we want parabolic SAR to be more stable. So I've come here and made the change. So you can see that this is how the chart looks like. And it is very clear here. So whenever the price moves above the parabolic SAR, there is a high chance for the trend to be bullish. And whenever the price moves down below the parabolic SAR, there is a chance for the price movement to be bearish. So you can see a bullish price momentum here where the parabolic SAR was crossed from the bottom, and you can see a bearish trade being formed here because the parabolic SAR has been broken from the top. Okay, so it's very easy to understand. It's very easy to implement, and that's where the catch is. Okay, when something is so easy, you have to understand it very deeply to identify what the catch is, and that's what we'll get into next. Because you have to understand that parabolic SAR does not work really well in sideways markets. Okay, so how did we start the video? Nifty is now trending compared to the last few months, and in such trends, okay, this indicators like parabolic SAR will tend to work really well. But when it's moving sideways, then this does not work, and that's the major disadvantage of this indicator. So the first thing that you have to do while trading this indicator is to see what is your stop loss. Okay, so I'll come here on trading view. You can come select the long position here because it's a long trade. Okay, so you can see the long position here, and you have to come see what is the stop loss. So your stop loss can always be the next parabolic SAR which is formed. Okay, now a breakout was given. So this bearish SAR value has changed into bullish. Okay, so it has moved below the price chart, and that is always going to be the nearby swing low. So you can see that this was a nearby swing low somewhere around 23,915 for Nifty, and that's exactly where this new parabolic SAR has been formed, and that's what we earlier called as extreme point or extreme price. Okay, make sure you have that in mind. So you can come here and you can keep your stop loss nearby or just below the swing low. And then you can see that, or you should be always having a potential for 1:1.5 or even 1:2 risk to reward ratio. I would even suggest this trade or this setup should always have a 1:2 risk to reward ratio. That means for every point of risk that you're taking, you should be having a potential reward of at least 2 points. So always a lower risk with a higher potential reward is good for this indicator. So let's get into how you can see that is possible. Come here, adjust this indicator to such a way that you're having a risk to reward of 2. And that's where your target should ideally be. And this is where your stop loss should ideally be based on the indicator. I'm not giving you a complete strategy just yet because it is a highly trend-based indicator. There is a chance for a lot of false breakouts and breakdowns. So in that case, you always have to keep your risk to reward high, or what will happen? You'll end up having a strike rate or a hit rate of, let's say, 30 to 40%, and you'll end up losing money. That is not ideal. So understand that in such indicators, you always need to have a high risk to reward ratio in place. You need this risk to reward ratio here in TradingView to be more than 2. For every point of risk, you need at least 2 points of reward. Make sure you have that in mind. So in order to make this more effective, even the inventor of this indicator, he had said that you always need to combine this with some other tool which helps you stabilize it. So the tool that he recommended was ADX, Average Directional Indicator. It was also developed by the same person. But for you, I would suggest that you try to go with some sort of price action based movements. Okay, so that's what I've seen work really well. So being an intelligent trader, you won't take a random trade when the price breaks. So for example, here in this trade, right? So in this specific trade where the parabolic SAR was cross on the opening, you can wait for the previous high to be taken out before you enter the trade and still see if you have a good risk to reward ratio, then only enter. Okay. Similarly, in this point, you can see that the parabolic SAR was broken here, right, with this candle at 12:20. But ideally, you should not be taking a trade there. You should be waiting for this candle to close, and then trying to take a trade. Why? Because then only can you confirm that with price action, the previous candle has been broken and that you will get a proper breakout from here. Okay, so getting into the conclusion of this video, the parabolic SAR is an amazing indicator and a trading tool that you can add to your arsenal for trading in trending markets. But always have some pairing indicator or some pairing strategy with it, like the price action breakout strategy, which could help you avoid false breakouts. And as always, make sure you learn this concept really well so that once you learn the theory, you can apply it in multiple ways that you have never even thought of. So that's it for this video. See you all again. Make sure you trade intelligently and trade safely. This is Ajay Ajith signing off. Bye bye.